those other guys do, and just give you an update on what's expected this week. There was also a Moody's downgrade of the U.S. debt, so we're going to talk about that briefly. And then what my thoughts and expectations are about the market. I think the market's going to sell off a little bit today because of the Moody's downgrade. But without further ado, let's get over to it. So Friday, sorry about the bumping, folks. So Friday, what we saw the Moody's downgrade. Now, it was kind of an intriguing downgrade right before the closing bell on Friday. Moody's rating agency came out and they downgraded the U.S. debt. That was a kind of a head scratcher because I'm like, okay, I know the debt's been growing and growing and growing, and but why this timing? So that was kind of the concern. Is it something my hat's a little crooked. Was it just a little bit of something to kind of piss off Donald Trump, or what was it? Because the national debt for a while has been, this high and has been going even higher. So that's what we're seeing right through there. So that's one piece of the puzzle. What a lot of people thought would happen is the tech stocks would sell off today, because what's happening right now is Moody's downgraded the U.S. debt. And like I said, let's kind of conclude with that. It's kind of a head scratcher because we know the debt has been climbing and climbing and climbing. But with Doge and everything else, and you might not disagree, or you might not agree with Doge, but at least they're trying to do something into trying to cut the national debt. So if you don't believe it or not, you can look at the national debt clock. You can actually follow Doge directly. So they are trying like heck to cure the national debt. So that's what we're seeing. But let's do something real quick. I'm down in Florida, and I'm down here, and I talked to, this is kind of on a side note. I know we're talking about Moody's right now, and it will affect mortgage rates. So we'll just conclude with that. So Moody's downgraded the U.S. Let me give you a little bit of thought on the Moody's thing. So let me know if the sun's in your eyes. So Moody's rating agency, they were also a huge culprit in the subprime mortgage debacle. So look back in history, because you have to understand how this works. Look back in history, and you're going to see Moody's had AAA ratings on the subprime mortgage market up until basically 2008, and that's when basically everything just imploded. But up until that time, they were stamping AAA bonds with. Well, you understand the subprime market is what actually killed the whole housing market in 2008. So, hey, good morning, folks. Jeff Duncan's in, Sean Hunter's in. Thanks for joining me, folks. I didn't go anywhere. I needed a couple days just to get away. This market is just killing me. So it's hard to kind of manage the market. But if you guys got any questions, I'll try my darndest to answer those, because you guys are kind enough to join me today. So here, I know I've said this 3 times, is Moody's downgraded the U.S. national debt on Friday, 10 minutes before the bell closed. Okay, so what's that all about? Well, they're saying that the U.S. national debt can't be sustained. We know that. They also know the timing behind that. I actually did my research, and they did this one other time, and they did it right before the closing bell as well. So I looked into it, and I'm like, why would you do it right before the closing bell? Well, the analysis was they were hoping that not to disrupt the markets. They were hoping to just jump in Friday evening and let the markets kind of self-cure themselves, I guess, over the weekend, or put themselves into positions as that. I don't really think the largest country in the whole world being downgraded is just going to pass by. So the timing of it, Friday, 10 minutes before the market closed, it's another head scratcher. So, are they trying to get at Trump just to say, on that? Okay. So that's my Moody thing. The market, not much news coming out this week, folks. And if you got questions, ask them. I haven't been really keeping up on the financials this week. I just needed to unplug a little bit. But the financials this week, really nothing coming in. We did have a couple stocks open up this morning. They were down. They were the tech stocks. Walmart's down. Well, not all tech stocks, but Walmart's down. What do we have? Netflix down, Reddit's down 7%. So a lot of pullback there. But let's see if you guys have any credit or any questions. If you guys have some knowledge on the on what Moody's just did and the history part of that or whatever, please chime in. I'd love to know what you're thinking there. Let's see if we got any questions out here. Where are you, man? Enjoy the sunny break. I am down in Cocoa Beach, Florida. One of the biggest things I wanted to do is when I was down here, in my building, I think there's 2 units for sale. I was driving up and down, I live right on the beach. So what I did is I was driving up and down the beach, and I want to kind of show you guys some of the properties for sale. And I talked to an investor. There's an investor in my building, and I said, "So, dude, how bad is it?" And he said, "Honestly, if you're on the first floor and you don't have a view, you're kind of screwed. Who wants to pay $500,000 for a first floor unit that you can't even see the beach or anything?" So I did my research, and he's pretty darn right. He owns 5 properties down here, so he'd be the first one to say, it's not good. But let me just, I'm actually on the main road right here. The beach is over there. It's just a block, not even a block this way. There's buildings here and then on the other side. But I wanted to show you guys, if I could, there's really not a lot of for sale signs. When I came down here, I was expecting just for sale signs everywhere. What I'm coming up to right now is the Cocoa Beach Pier. If you guys have never been down here in Cocoa Beach, I call it the Redneck Riviera, because, well, I won't say they're cheap, condo on the beach, 500, 600, 700,000, but you go over to Naples, shit, you're talking $1-2 million. So I'm at the Cocoa Beach Pier right now. If you've never been down here, it's kind of cool. Let me see if I can show you that. So that's where I am. Let me see if I can I can't even find a for sale sign, and I kid you not. I'll show you a view of the street. Okay, that's that. I don't know if I'm boring you guys to death, but I'm trying to help you understand the real estate market. Okay, so let's get over to rates. Rates this week are going to pop. They're going to pop today fairly decent because of the Moody's downgrade. So if you thought we had high enough rates long enough, I think they're going to be around a little bit longer now because the Moody's downgrade is going to pump up yields on everything. And that's not good for the markets. So let's see, anybody else have any questions about anything? So I will be flying back today, so I'll be back to normal schedules tomorrow. We'll have a live event on Wednesday to let you guys know what's going up with this. But I really wanted to show you guys that they're really, I don't know how I show you, really wanted to show you guys how there's really not a ton of units right along the beach. And the beach got hammered during last year with a lot of the special assessments, so we had that. Okay, so now let's get over to some mortgage programs and products. So mortgage rates, as we know, they're gonna go up this week, just in general because the Moody's rating agencies with the US is jacking up yields basically across the board, so that's what we're seeing there. I gotta go another way because there's some construction down this way. On the economic front, there's really nothing coming out. There's retail sales coming out later this week. There is one other economic factor, but nothing really there to kind of give any meat to the Federal Reserve. Now, there was one Federal Reserve member that did come out this morning, and I think it might have been yesterday, and he did say he's only expecting 1 rate cut this year. So that's, but that's right now. So if we come back, in a month or now and the tariffs get solved and everything else kind of falls into place, that's what I'm expecting. Okay, I'm not kind of the glass half empty kind of person. I am a lot of times in life, but with the business cycle that you have right now, I just don't see a lot of things crashing if the tariffs come back and they're okay. But even President Trump said, they're not going to keep 140% tariffs on China. It's probably going to be way down there in the 10-25% range. And I think that's what's going to happen with a lot of the other countries. So think of it this way. If you have a tariff that sets in place at, let's say they come in about 10%, okay, which you have to realize, that's 10% revenue that our country's going to get on things that we've never really gotten before. So yes, will it maybe pump up the inflation numbers? It could, yeah. If it's 5 or 10%, maybe The producer can eat, 3 or 4%. Maybe the seller can eat a little bit, and the consumer, you still have a 2% increase in yields on things. So, maybe that won't be so bad because we even had inflation. We came off inflation recently at 7%. Now we're down, basically, we're darn close to 2%. So that's what we're seeing through there. Let's go down to this subdivision. Here's an area I want you guys to see. And the reason for this wasn't only to give you the economic insight of what's going on today. I want you to see, everybody's saying Florida's crashing. Well, yeah, there's some parts of Florida crashing. Heck, I can show you some parts of Chicago that are crashing. And there's reasons for it. Is the area terrible? Is the school system bad? Things like that. But overall here, let's see. I'm going to show you this. This is a complex. Let's see if there's any for sale signs here. Hold on, I'll spin the camera. Well, there's no for sale signs there. I'll show you across the street with the condos. And just so you guys know that I'm not just cherry picking things like a lot of people do, I'll keep rolling up the block and showing you what else is out there. But if you got questions, let me know, because like I said, the whole point of this was not only do I want to talk about rates and the economy, I want to show you that if you have a condo on the beach, what most likely happened over the last 2-3 years, you got hit with a huge special assessment. And we're talking on average probably between $70,000 and $90,000 that you had to pay. So when you think of that, the first thing you're thinking is, well, the condo market's going to go completely to shit. Because if you're already spending $500,000 on a condo, you really don't want to plug in another $75,000 in special assessments. So that's my whole take there. So let's get to the next road over. And I hope you guys can hear me. Big garbage truck just went by. Let's go down to the next block and I'll show you what's going on through here. If you can see, this is the backside of that complex that I just showed you, but I don't really see, there's nothing here as well. Let's take a quick glimpse there. So nothing there. And guys, I'm not whiting out any for sale signs. I just want you to see, I'd love for you guys to be able to, somebody to provide you the truth behind things. And yeah, the Florida market, is it fantastic everywhere? No. I mean, but it's not fantastic anywhere. Anybody got some questions? So let's see what we got here. We had good morning from James. Thanks, James. We have how long until rates get back under 6.75? Well, this Moody thing's throwing a huge monkey wrench in the shit. What I'll do is tomorrow, I'll analyze it tonight. I'm actually flying back to Chicago. I have a late evening flight tonight. So tonight and tomorrow, I'll be analyzing the Moody's downgrade to see how that should affect mortgage rates. It will, because what it's gonna do is overall, it's gonna push up yields, okay? So the yields on even government bonds are going to go up because of this. Now what their concern is, you might have a lot of foreign investors, and they've been saying this for, and since the tariffs came out, they said you're going to have a lot of foreign investors possibly not buying our U.S. debt. Well, last week, I think it was last week or the week before, right before I left, is they had a whole bunch of bond auctions. Those bond auctions actually went fantastic. Rick Santelli on CNBC, he came in after the one. He said, I give that a AAA rating, because he's like, my concern was a lot of foreigners coming into the market and not buying up the market, or buying up our mortgage bonds. So thus, in a roundabout way, would push up yields, because if you have less buyers, you're going to have higher yields to get rid of that debt. So that's when we saw that happening. I think I'm almost sure it was last week, but it might have been the week before. There was multiple bond auctions, and they went fantastic, even according to Rick Santelli. So that was what was going on. But now with the debt our national debt getting whacked, that's going to push up yields just because of a risk factor. Think of it this way. Think of it as your credit bureau, your credit report. If you have a shitty credit score, your rate's going to be higher than somebody with an 800 credit score. So think of it that way. The U.S. debt had an 800 credit score, and now it just got downgraded to 720. So, will there be effect? Yeah, there'll be an effect. Will be a huge effect? Most likely not, but only time's going to tell. But here's the weird thing behind all this is this. Why did Moody's come out Friday? Right when the market's kind of at its teetering just between, what's the tariffs going to do and all this other stuff. And then they throw this in on top of it. Was our national debt worse 6 months ago? Just saying. And it's not an administrative thing. I'm just saying, did they cure the national debt, or did it get much, much worse over the last 2-3 months? I don't think so. So that's where I sit here and I scratch my head. And then when you also talk about it and you say, okay, it happened at 3:50, 10 minutes before the market closes, that's another thing. So, okay, let's go back here. Oh, we have a few for sale signs. Let's go down this road. Sorry, I'm standing right in the middle of the road. Here's a street right across from where I have a place. There's no for sale signs. So let's keep going. There are some for sale signs across the street. So let's get up to here. But guys, I am in Cocoa Beach. I'm walking along the beachfront, and I just want to show you guys, if you would have came down here in 2008, 2009, there would be I have actually had to sell a condo on the beach back in 2008. I will admit to that. I bought it, had it for about 4 or 5 years. The mortgage market just stopped, and I've been doing mortgages for 36 years. So just think about it. If your business or your income just stopped. I had people that wanted loans, but no banks were lending. So I was just like, okay, honey, we got to start liquidating our stuff. So one of the first things to go was a condo down here. I lost my ass. I lost about $150,000. I won't say it's my ass, but lost about $150,000. And that's what happened. So we're at the next complex. I'll show you down the street, and then I'll show you across the street another condo complex. And there's a lot of construction going on down through here. So let's go to the next block. And if you're out there, you want to be contrarian to this, I have no problem with that. So that's that part of it. I'll show you across the street. Okay, no, guys, I didn't run up and down the street to take down the for sale signs. But again, each market is a little bit separate. It is expensive down here with the insurances and everything that went up. That's what happened. But if you guys got any questions, let's see if anybody else has anything. Do you see tariffs affecting mortgage rates? Yeah, tariffs are going to affect them anywhere. And then Sean Hunter, where in Florida are you? At Dano. I'm down at Cocoa Beach. So if anybody's ever been down here, I'm walking up toward the sandbar now. But this is where I'm at, and like I said, I call it the Redneck Riviera, because if you took the same condo on the beach here and put it over in Naples, it'd be probably 3 or 4 times the price. And then you also get cool things like this. Let's see if there's anybody over here watching. There's a little bird over there. Okay, now up to the next one, and then I'll circle around and then I'll head back home. But the market today, I thought that this week would be pretty much like non-eventful, because we